Hi guys, welcome to another episode of Finance Talk, where we speak about finance, business, and investing. I'm Eugene. I have more than 10 years of experience in business. I also interested in finance and building my own portfolio and hoping to set up a fund in the nearest future.
And I'm Nick Rational. I too have a lot of business experience and been doing the investing for a while now. Together, we're going to share with you what we have learned, and together we can all learn more and become greater investors. I too hope to start a fund in the near future, and let's all learn together.
So, what will be our today's topic, Nick?
I was thinking would be useful to our listeners to listen to some actual checklist items. Would you be willing to share some of your checklist items?
Yeah, I would definitely love to do that. I need to say that we are not a financial advisors, and these are our personal checklists based on what we discovered and learned from popular investors and our own experience as well. And we think that this will be handy for you as well. Our checklist contains like 50 points. It's like the initial checklist, which you can just implement before deciding and digging deep into the company. So it's like the initial filters. And we will go step by step for them and just discuss points. So the first one will be, is it in my circle of competence? So this is the crucial thing which I think every investor should ask him or herself, because immediately 90 to 95% of the companies will be swiped out from your list, from your actually continuous analysis when you answer this question. What do you think about that, Nick?
I think that's a very good first question. Is this company in my circle of competence? And there's a lot of ways of deciding if it is or isn't, but for me, one of the simplest ways is, do I understand how this business makes money? And what are the key performance indicators in this industry? Like, do I understand what's important for this company to be making money? Over to you.
Yeah, and it's really helpful to have the previous working experience in the particular field, so you can easily grab like 2 or 3 indicators in order to understand how the business makes money. It really helps. And this brings us to the second question, which I usually ask by myself, even though this will be the similar in the end. So I try to briefly answer to myself in 10 or 20 seconds whether it's a good business or not, without any further analysis. So it's like the initial, I would say, markup for myself. Because, for example, when I start to analyze the company, and I have some feelings about that and have some previous knowledge. So, for example, if it is like the tobacco company or something like that, I will immediately feel not so well about this company, because this business can harm other people, and this can be like the conflict of interests. For that, I can also pass on the company as well. What do you think about that?
I think this is a good mark of whether it's in your circle of competence. If you're looking at like a paintball equipment company, or a fishing equipment company, or hiking equipment company, you think to yourself, have I used this product before? What did I think of it? What's their customer service like? Is it high quality? Do I feel excited to be buying this product? Are they the automatic choice for me when I'm at the store? If I'm looking for an orange juice, is the brand that I'm thinking of investing in, is that the one I would reach for? So that is a good question to ask yourself.
And actually, you do not need to spend a lot of time for that. It's just like 5-10 seconds with your current knowledge and experience. And I can actually ask this same question in the end of the analysis one more time. So when I understand and see what is going on in the company, still will I be able and will I feel well investing in this business? And this brings us to our next point of the checklist. Is this business really great? And by that, I mean, does this business have the durable competitive advantage? So in order to understand that, we really need to understand the business, and we really need to think of and find the modes, ideally not one of how this business can survive in different occasions. What do you think about that, Nick?
I think this is the checklist point that expands the most for me. I have entire checklists just to determine is this company going to be stronger and bigger in 10 years' time? Can it withstand the attack of competitors? Is it anti-fragile in inflationary periods? There's a lot in this question of durable competitive advantage, what type of a moat, and that kind of thing. So identifying this checkpoint is probably one of the most important ones, in my opinion.
I definitely agree. And as we said in previous episodes, when we speak about checklist, you can have like the sub checklist in your point. So this is definitely the point which should be just enlarged. So in order to that, you need to think how this business save during the war conflict, or is it like the bulletproof, and can it be bankrupt, and what can actually be with the business, and how this business can be losing money or poorly managed, and etc., etc. So these are things which you need to consider as well. And that's bring us to the next point: is this business already have or will have the PE of 1 or 3 or 2? So by this I mean that can we project the revenues of this particular business and the free cash flow and net income for the future periods, in order that we will have the particular margin of safety in purchasing this business? So for example, when I purchase the retail store for $1 million, and I project that in 2 or 4 years it will make 1 million in year profit, I think this can be the really great investment, because you can easily double or triple or receive higher X on your initial amount. And we need to consider that as well. So what do you think about that, Nick?
I've not considered this particular one for my checklist. A lot of the companies I buy, their PEs are very high. Although I do try to make sure they're not crazy high. One of the ways to look at PE I've found is you imagine that number is the amount of years it would take for you to get your investment back if 100% of the free cash flow went into your pocket for those years on a per share basis, of course. So, if it's on a PE of 250, what that means is that if there's no growth in the company and it makes the current free cash flow that it does, and you bought it at the current price, it means it would take 250 years of the profits going into your pocket for the entire company, to pay for all the shares that are at the current price. So you think to yourself, that's a lot of years to get my money back. Maybe I don't want to be investing in this company. Of course, it can be a little high if you do expect terrific growth rates, but sometimes you think to yourself, 250 years, is it really going to grow that much that I'm going to get my money back in 7 years or 14 years? So you've got to really consider PE rate to see if it's fair or not. So that's how I look at PE rate. But I'm definitely interested in thinking about the way that you describe it, although I've not looked at many companies with those kinds of PE ratios.
And actually, when you look at these numbers, it doesn't mean that you just look and go to the screen searching for PE of 1 or 2. So probably this can be the combination of some events. For example, when the company had like PE of 60, and now it dropped like to PE of 20. And when you invest in the company, which is still with a higher PE, considered to the competitors and all this stuff. But actually, if the event doesn't hurt the company so much, you can actually come back to the initial numbers, like to PE of 40 or 50 or 60. And for your investment, this can be the PE of 1, because you can back and you can double your money in 1 or 2 years. This what I mean by projecting and searching for P of 1 or 2. This is the end of this episode, guys. We will continue next time. And if you have any questions, please write them down in the comments below. And see you next episode.